Welcome everyone to our Case Western Reserve University Entrepreneurship Speaker Series. I'm thrilled to welcome, I'd say an old friend, but we're very young. Randy, Kahn, and I were classmates at Wharton, and it's great to have him here today. We were able to catch up a couple of weeks ago to hear the work that he's been doing since we graduated from business school, and really thrilled that he can share his story today and engage in conversation. All of our speaker series sessions are moderated by our students, so we're really thrilled that Nathan Rudy, who has been an attendee at some of these sessions but never worn the moderator headset. So Nathan, thank you for your willingness to moderate the discussion. I really appreciate it. Like we always do, we want your engagement. And if you're watching on LinkedIn Live, just post a question in the comments, and Julia and I will be monitoring it. And if you're joining here on Zoom, just let Nathan know either by putting it in the question in the chat or just raise your hand, and Nathan will call on you. So with that, thank you, Randy, and thank you, Nathan. I'll turn it over to Nathan.
Awesome. Thanks, Professor Goldberg. And yeah, thanks, Randy, for being here as well. So like Professor Goldberg said, my name is Nathan Rudy. I'm a fourth year here at Case Western. I'm doing international studies and economics, and I'm excited to be moderating today's event. So a couple notes before we get started here. Like Professor Goldberg said, we welcome your questions, and we'd love to hear kind of your questions either in the chat, if you're on Zoom, or like Professor Goldberg said, if you're watching on LinkedIn Live with us today, you can feel free to direct your questions there, and they will direct it to my attention, and then I can ask those. You can also, if you're watching on Zoom, do the raise hand function, and then I can say, do you want to introduce yourself, ask a question, stuff like that. So plenty of different ways to get involved. Don't feel shy. And without further ado, let's get started. So fantastic to see Randy here today. Fantastic to see all of you today. I was hoping, Randy, we could start. You have a very interesting background because you started in computer science and then you switched over to investment management. So I was hoping we could start by, could you talk about like how you made that switch and what inspired that switch, that path?
Sure. Thank you for having me. I appreciate Case Western having me and Michael inviting me. All the interactions with Julia and Nathan, thanks for moderating. I guess just quickly as a background on me, I came from a small town in Colorado, ended up going to school for computer science, graduated with a degree in computer science. And I was realizing that I don't want to spend my life, at least at the time, this is how it was. I didn't want to spend my life sitting in a back room coding. I was much more social than that. And so I started thinking about entrepreneurship. And I've been kind of all my life thinking about entrepreneurship. It's been something that I've always wanted to do. So I took I think, a very circuitous route. I started a small consulting business for computer consulting prior to going to Wharton, and then ultimately decided that I needed to learn more about the business of business, and went back to Wharton with the idea of becoming an entrepreneur, probably in computer science. This is the time of the dot-coms and everything, where everybody's making money in computer science, but I'm a programmer in Washington, D.C., programming on mainframes when everybody else is doing more innovative work. So when I came out of Wharton, I ended up falling in with a small investment bank, really investment advisor based out of the US Virgin Islands. We had a small trading operation, and we also had an investment management operation, particularly focused on financial advisory for bond deals. A lot of the clients were in the US Virgin Islands. We had some in different places. And then following that, I realized that my career being tied to the Virgin Islands, as much as my boss was a mentor to me and really was a supporter of mine and somebody I will always be in debt to, I realized that I just couldn't tie my career to his smaller firm and something that's focused on just the Virgin Islands. So I ended up leaving and becoming my own consultant. And that was probably the most liberating experience I've ever had in my life. It was scary originally because I didn't have healthcare. I didn't have a whole lot of different things that I didn't have a steady paycheck. I had bills, I had student loans, I had all that stuff. But I realized relatively quickly that I had the skills to be able to go out and actually do things on my own. And that freed me from being able to feel like I was a slave to some kind of a job. When somebody said, you have to do this or have to do that, I knew that my other option was just to quit. And that was by far and away the most liberating experience I've ever had. Then I ended up, I'll go through it fast from here. I ended up at one of the people I had done financial advisory work. He was on the other side of the table from me. He ended up saying, after I went out on my own, if you'd like to come over here, let me know. I can put in a good word. He brought me in. The interview process, it was unlike anything I've ever seen in my life because I was being brought in by somebody who was part of the inner circle. I don't even know that they looked at my resume. I just came in for a casual conversation and I was hired the next day. If I had the approval of him, I was good. So then he ended up saying to me, look, do you have any entrepreneurial ideas? It's a very entrepreneurial company. I ultimately said, yeah, came up with a couple of ideas. We took that through the structure, and without him, that absolutely wouldn't have happened. He had the credibility within the organization. And then we ended up building our own platform within a really big company. That really big company ultimately went bankrupt, and we ended up being able to buy our platform out of that business. And that's what created Greenline, which is an investment management firm. We focus on lower income communities around the US, specifically within the US, figuring out how to trying to bring market rate capital to lower income communities and make investments. And it's been, that's what we were doing on this bigger company as well. And one of the ideas that I had brought to the bigger company. And, now it's me and two other partners who own the majority of the firm. And then all of our employees have most of our employees have stock in the company as well. It's a small firm, Greenline Ventures.
Fantastic.
If I'm ever running on too long, just let me know. I'll cut it short.
Sounds good. Well, thank you for such a thorough recounting of it. I really appreciate that. I guess I was curious. So it sounds like you took a lot of steps in between. So I'm assuming you learned a lot along the way. I guess I was curious if you could share what was one thing you learned throughout the process that maybe you weren't quite expecting.
That's a good question. I guess, there were a lot of different things I learned. One of the things I learned, and I think, just kind of more as a generic concept, and I learned it relatively early on, is running a business is not just having the skills that are required to, do whatever your task is. If you're a plumber and you go and you decide to start your own plumbing business, it's great. You can be the greatest plumber in the world and still fail. And the reason you'd fail is because you don't know the business of plumbing, how to structure your contracts to make sure that you get paid, how to understand how to interact with people, how to market to people, all of that type of stuff. Those can be really difficult and can end up sinking your dreams of, doing well. So I would say that was one. I'm sure I could come up with a variety of others, but just in the spirit of kind of entrepreneurship, that's something that I would share was a big learning experience.
Yeah, absolutely. I'm sure that's a great lesson. Many people can learn a lot from that. So obviously there's, given that we're at a university and some of the audience here,
they have a vast amount of experience. They have connections into places that you have no earthly idea. And for me, and I think for all the different people that I talk to, they're worried, oh, I don't want to bother this person, or I don't want to bother that person. People say that to me, and I'm like, I want you to bother me. I want to be able to help you. And I think there's a lot more people out there that really do want to help, that really do want to put you in connection with different places that you want to go. And so I would urge anybody who's looking to go into any kind of field to find people who are, doing that might be part of their network, or even, one or two removed from their network. And it's great we're on LinkedIn. They put this together where you realize that somebody's a second connection or a third connection. You can connect into that person through your contact. Those, I would say, that is by far and away the best way of getting anywhere you want to go. You learn about, the industry and more depth than you probably know. You learn about who the players are. You learn about where where the traps are, that you don't want to step in. You learn where the different places are where you do want to be, how you can move up through the ranks. I mean, it's endless. And I would just urge people to use their networks as much as possible.
Yeah, absolutely. I mean, networks are huge. That's definitely something I've learned a lot about the past couple of years, and I'm sure others have thought a lot about this as well. I wanted to ask a little bit more about like current day situation with networking. Obviously, COVID has changed a lot, in the working world elsewhere. I was curious to hear your thoughts on like how you think COVID has changed networking from your eyes and your work, and what opportunities have you seen as a result of COVID?
I guess it's interesting. I guess my thoughts on that would be more, I've actually been in touch with more people after COVID, more of my network, primarily because we're meeting over Zoom and various different forums. And we're spending a lot of time kind of networking because we can't be out. So I'm getting more networking like that. And I think there's a lot of benefits to it. And it's a way to, continue to learn some of the different things I need to learn, to connect with some of the different players that can help me in my business, that I can potentially help with theirs. But I will say that what COVID has done, and we were talking about this a little bit before the meeting, it's created a situation where most people are not going out and hanging out together. One of the places I did a lot of the networking that I've done over the course of the years has been, going to conferences and the after, sitting in the bar afterwards, or sitting, going out to dinner or something like that, meeting people in the hallway. There's conferences that I go to that are part of our industry. Almost never do I even go into the conference and learn what's going on. I'm standing out in the hallway, meeting people, talking with people about what's going on, and learning about investment opportunities, learning more in depth about kind of what's going on there, getting to know the people better personally. So I think that hasn't happened as much. So from an investment perspective, it gets a little bit more difficult because travel is harder, it's more expensive. Different people have different takes on this pandemic, and getting together is a lot harder. So when you're not able to get together, it's a little bit harder to make the investment. It's a little bit harder to make the connection to the people that you might find an investment with, or if you're looking to get an investment that you might have a little bit of trouble with. So trying to connect with people outside of the more formal, like this being more formal, where there's a phone call after or some way to get connected, I think would be valuable. But I think that's been something that's missing over the last year and a half.
Yeah, absolutely. With the new constraints means new ways of networking and getting to know people. Absolutely. I think we have a question from the audience now. Melissa, could you, if you're okay with it, could you unmute, maybe introduce yourself and ask your question?
Hi, sure. Actually, my name is not Melissa. I had to use my friend's computer, so it's on her name. But my question would be, what advice can you give to individuals who do have a business, but they don't have the funds for constant marketing? So what are unique ways that we could still give our business exposure?
That's an interesting question. I'm not somebody I'm a dinosaur when it comes to social media and things like that. I know that there's been a lot of marketing done that way. I think it depends on the business. But I really do think that just kind of the networking is always the best. I guess maybe my question to you would be, what kind of business are we talking about that you're trying to market?
So it's kind of two. It's one is a skincare business, and then one is like a tech business. So it's startup. They're under like, it's like a sister company. So
Okay.
yeah.
And so
everything
the-
is like new. The networking, the social media presence, that's all really new.
okay.
Yeah.
And do you have somebody, are you savvy with social media and different types of media?
So I'm savvy, but I'm not very much a social media user. So I have to kind of put myself out there to do it more. Like before, I never did it. So I'm getting more adjusted to using it.
Yeah, I guess my advice to you, and this kind of goes back to a previous answer I gave, would be to, find somebody, and I don't know that I'm the person that can give you the marketing advice in that regard. I think there's different things that you can do, and frankly, I'd be happy to have a conversation with you more in depth to kind of learn more about it and, give you any ideas that I have. But my main response would be to find somebody in your network or to network into somebody who knows that stuff well, and see if you can do that. You can also talk to associations, different associations that are out there. They usually have a lot of connections as well as different ideas on where you can market or how you should market.
Okay, thank you.
Mm-hmm.
Nathan, can I jump in with a question? I didn't
Yeah.
do my hand raise appropriately. Randy, again, thank you for joining. This is a great conversation. I want to talk about and to some degree, as you were engaging with Melissa and as an entrepreneur, small business owner, I mean, I'm intrigued by the work that you do that really touches a wide array of entrepreneurs. You yourself are not an entrepreneur, and then you are providing access to capital in a variety of different ways to small business owners and entrepreneurs. I'm sort of curious, as someone providing that access to capital, how much of your work is rolling your sleeves up with the entrepreneur to really understand the value proposition. So a lot of the work that we do sometimes as educators, and particularly with entrepreneurs, is trying to get at the core of their differentiated value proposition. And some of our entrepreneurs frankly struggle to describe what makes them different. I'm sort of curious, as you've engaged with a wide variety of businesses, including, I was very intrigued even at a very small level, like the microloan program that you ran, like the entrepreneurs that get it, that can sort of describe and sell their vision. What are some of the attributes that make them successful?
Let's see. I guess it's a variety. It's a good question. So I guess for the first part of your question, we want to be able to see the vision. We want to be able to see what differentiates the company, what's valuable about the company. I think there's a number of kind of value propositions that I don't know that are always focused on. You might be doing the exact same thing as everybody else, and all these other things are exactly the same as 100 other people in the market. But if you have a special connection to a particular part of the market, that could be a business. That could be your differentiator. As long as you have that connection. I'll use as an example, we funded a business. It was a furniture business. And it was a guy who was working for somebody else in their furniture company. And the owner had him doing everything. He was doing, all the credit. He was buying all the furniture. He was selling everything. He was managing all the people. He was doing everything for the furniture store, but he was getting paid, some small salary, and the owner was making all the money. So this guy said, look, I'd like to start my own company, but I don't have near enough money. Nobody's going to give me a bank loan, anything like that. But I'd like to do that. We ended up making an investment in him. And because he knew the customers of this other business, he was actually, he spoke Spanish, he spoke it fluently, and a lot of his customers were Spanish-speaking customers. And so when he left, they all followed him. That was a great differentiator for him, for his business. He actually was able to, we gave him a 3-year loan. He paid us back in 6 months. He went through a lot of hardships. He was a dogged person. He, handled a lot of different things and ultimately paid it back, and his business is up and running and doing well. So, there are lots of different ways that you can differentiate yourself, and some I think are go unnoticed. But I think, more to your point, what are we looking for in an entrepreneur? I think somebody who will demonstrate consistently that they're a problem solver and that they can get it done. Because every business plan that anybody ever puts together, 90% of that, maybe 80, and depending how good, maybe it's 70, is not going to work out the way you think. So how are you going to recover? And, if I gave you my money, I want you to be guarding my money as well or better than you would be guarding yours. And I want somebody who's going to be able to turn and do what they need to do to make that work. So if you've got a good plan, you've figured that out, you're somebody who I really can see as being a strong entrepreneur, problem solver, able to think on their feet. From an entrepreneurial standpoint, that's very valuable. What kind of resources do you have? Connections, people, other things. Are you willing to really make a commitment? I was talking with somebody who wants to fund a welding business that they're trying to start, and they need to buy a truck. And I asked the person, I said, well, you need to buy a truck and you have a car. Are you willing to give up your car to buy this truck? And he said, yes. That's a big deal. I mean, it seems like a small question, but that ends up being a big deal. That means I'm committed. I'm doing what I need to do to make this work. So those are, some of the main things that we are looking at. And, obviously it's got to have something that we believe is going to be able to work, that the business plan is solid and that we believe that it's going to be able to work. Yeah, I think those are, some of the bigger ones. I don't know if there's any more to that question.
That's great. I mean, because of the range and size of entrepreneurs that you support, from somebody that you're engaging with in that decision between, selling your car to buy a truck, to some of the larger folks that you may be funding. I think it's really interesting because in some way, even kind of size doesn't necessarily matter. Those questions, you're asking good, hard questions of anyone, and that's going to determine your willingness to lend, sort of how they respond.
Yeah. And it's important to know that, we're making loans that banks wouldn't touch with a 10-foot pole, right? We've got some other, and some of them are equity investments, and different kind of hybrids of, going between the two. But, we make some more traditional loans, and most of the traditional loans, even though they're deals that like a bank wouldn't touch with a 10-foot pole, as an example, we're looking at a deal that is essentially a concert venue, and they'd like us to invest, and they don't have a whole lot of collateral. They're trying to build the venue and then operate it. They don't have any operating history, so it's a very difficult project to look at. They are potentially, and I don't know that this is the case yet, but they are potentially willing to provide a sponsor that's willing to essentially say, I'll guarantee the whole loan. And even with that sponsor saying they'll guarantee the whole loan, that might not be, and very well might not be, a loan that a bank would make. And it sounds counterintuitive, but banks want two ways of funding, and going after a guarantor is not an easy thing. It's very hard. So banks don't want to touch those things. And so you might think, hey, there's plenty of credit here and all this, but unless that person who's guaranteeing it takes out essentially a personal loan, that's bankable, because then the bank's going to be holding them directly responsible for the money and holding it, versus guaranteeing a loan. So there's a lot of different ways that credit kind of works that is not intuitive to somebody who's not in the financial industry. And it's usually a lot more strict where, somebody who's not in the financial industry will look and say, oh, that deal's going to be good all day long, but it's not. There's lots of ways that you can lose your money, and we've had some where we've lost it all.
Yeah, a lot of great insights there. Thank you for sharing. So I think we have another audience question. First, I'm going to go to David, and then I'll go to Mitchell. It looks like they both have questions. So yeah, David, if you could first introduce yourself, ask your question.
Sure. My main question here is, what is, in your opinion, the best way to get experience in this type of field? Would it be to start your own venture immediately out of college, or would it be to join some sort of existing company?
Great question. I guess let me ask a follow-up quickly. What industry are you saying you'd like to get into?
I would ideally like to get into something psychology related, whether it be a private practice or a general management firm for studies or something of that sort.
Okay. And I guess for starting your own business, and again, this is kind of going back to that welding company. One of the things I was talking with them about was when, going out and making sure that you have the requisite skills as an entrepreneur. Can you do the work? Do you know the work well? I'll go back to a different deal. We funded a guy who was trying to build a small trucking business. And so he started out with the box truck. He wanted a loan for the truck, couldn't otherwise get a loan. When you go out and try to do a box truck, if you're renting, the rental agencies essentially take almost all the profit that you can possibly make. And people can still make some, but it's difficult. So by buying a truck, he could literally triple his profits. So he wanted to buy a truck. We gave him some money to buy a truck, and he actually went through a bunch of different problems, but ultimately paid us off in about half the time that we expected or had given him to do it. He then decided he wanted to go into the long haul trucks, or actually into the semi trucks. And that's a whole nother kettle of fish. It's a totally different industry, different regulations, different things like that. I bring that up because I think you need to really make sure that you understand what your business is and what you want to be doing. That should be something that is very clear and defined in your mind that you can, do an elevator pitch for. 30 seconds to say, this is exactly what I want to be doing or what I am doing. So I think that's number one. And then number two, getting involved with the business end. So to answer your question directly now, what I would suggest is probably getting involved with a business that is relatively similar to what you're wanting to do, and learning the business that you need to know, paying attention to the details of how that business gets done, and trying to see how much of the back office kind of business stuff that you can get involved in. I think that can give you some real good experience as to what you need to be paying attention to and how the business works and where the pitfalls are and the like.
And it looks like we have another question from Mitchell. Thank you for your patience, Mitchell. Feel free to unmute, introduce yourself, ask your question.
Sure thing. Thank you, Nathan. Hello, Randy. My name is Mitch Webb. I actually just graduated from Case last December, studied under Professor Goldberg and Doug and everyone else. I was curious to learn a bit more. I mean, first, if you could just give me a quick, 30-second overview of Greenline, and specifically, I see 4 different types of funding. Looks like 2 or 3 different more debt financing opportunities, and then also a venture capital arm. Curious if you could just recap that for me real quick, then I got a follow-up question.
Okay, sure. Yeah, I guess so. Greenline, I'll try to keep this short. We started out of this bigger company that was running the New Market Tax Credit Program, which is a federal program that incentivizes private money to invest in lower income communities throughout the country. That's our main business, our bread and butter. It has been, since we've been formed. That business allows us to essentially offer tax credits to investors that want to put money into businesses that are benefiting low income communities. They're very, very complicated structures. They tend to be much bigger deals where you're investing, $10, $15 million in a pop. You've got, and you've got probably 500 pages of documents to try to close that deal. It can take months and they're difficult. But there are a number of deals that are bigger deals that are like that, that are trying to get that last little bit of funding that little gap that they're missing, that this was intended for. So we have that product. There's a lot of compliance related things around that product, which are very risky for investors. So most of the time those investments are structured in a way that makes it as, that de-risks the new markets deal, the new markets tax credit portion of the deal. And that can be hard for the businesses to swallow sometimes, and it sometimes kills a deal. We decided that we wanted to create a different product out of the new markets and take on some of the risks that other investors weren't willing to take on. And we created a smaller fund that can go between, call it $500,000 and $2.5 million of investment. And these are loans. They can also be they're usually almost always subordinate loans or preferred equity or something to that. Like, I would say they're really subordinate loans with maybe some warrants or some kind of preferred equity piece to it, or can have that if it's a higher risk deal. That allows us to do those smaller deals. Some of the deals, a couple of the deals that I talked about have used that one. I didn't talk about any that used the bigger one yet. And then we have we're managing some money for an investor that is doing opportunity zone investments. And so we're doing that primarily in the state of Colorado. And then with our new markets program, some of the profit that we make off that new markets program, we keep in as essentially an evergreen investment fund. And that evergreen investment fund is intended to be, it can be anything from debt, senior debt, all the way up to equity. And it's our money, and it is focused on lower income communities and the spirit of the New Market Tax Credit Program, but gives us flexibility to work with lots of different people. And I would say that most of the deals that I've been describing on this call have been of that ilk and are that, it's not, I wouldn't describe it as a venture capital fund. I think I look at venture capital funds as more institutional money, organizations that can really focus, a couple of things that venture capital people can do that we're not as good at doing. One, they're usually industry focused, or they have a strong industry focus. They might end up having a size focus, like early stage or mid stage, but they have people who have the ability to provide substantial assistance in the form of other companies that they have, in the form of some of the investments that they have, in the form of some of their contacts and the like. We don't have that level of them. We have some level of them, but we're a much lower level of them. The other thing is they have more of like a 10-year life. Ours is an evergreen fund. We don't have any defined exit that a lot of venture capital firms do. We're not focused as much on the exit. We want to make sure that we're, making money, but also putting in patient money. So, we do investments like that. I would characterize us and that fund more as like an angel fund, similar to like an angel investor and what an angel investor can do, where we can provide some level of support, but we probably can't provide the level of support that a more institutional organization can do.
Gotcha. Thank you. I appreciate that. That's all great. And then I'd like to follow up with one other question, if that's all right, Nathan, or if you got to sneak over to Julie and can come back to me, I'd be okay with that as well.
Yeah, actually, I think we're running up short on time. So if it's okay, I'd like to let Julia ask her question real quick, just to kind of bring us home. But yeah, thank you for the question. I appreciate it.
Thanks, Nathan. Thanks, Randy, for being here. I'd love to just briefly kind of hear in your own words what you feel the importance and impact is of the work that Greenline Ventures does on those communities of otherwise maybe underserved entrepreneurs, and where you've kind of seen that impact come to life.
Yeah, I guess so. We look at impact in a couple of different ways. The new market tax credit program essentially is our initial determinant of that. So what we have to do in order to get an allocation of new market tax credits is we have to put together a really big application, and we send it in, and it's got to have a business plan and all the different things that we're promising we're going to do. And then we end up having to sign an allocation agreement that says, we're going to really be trying to have these impacts that we said we're going to have. So our focus is primarily on jobs and the creation of jobs in low-income communities. We also have a focus as a minority-owned company. We have a focus on trying to find minority-owned businesses and making sure that we're trying to have a representative investment portfolio of minority-owned businesses. And our idea, there's not a lot of times that we can find a business that is started by a low-income person. So we're trying to look at what the benefits of the businesses would be beyond that. Obviously, if we can figure out a way to fund a business for a person who is low income, that would be ideal. But looking for businesses that might be within the community, that are hiring from the local community, that might be hiring from some of the places where jobs are harder to get. And that's our primary impact. I don't know if there was more to that question. I'm happy to, if you have a follow-up to it.
No, that's great. I was just kind of looking to hear that in your own words, and that's a really great way to look at it. And hopefully you can, end up moving more towards directly, helping those underserved entrepreneurs as well. Awesome.
Yep.
Thank you.
Awesome. Thank you, Julia. That's a fantastic last question to close us out. Yeah, thank you again, Randy, for doing this. Really appreciate it. And thank you to all of you who've been tuning in today and so engaged. We really appreciate your participation, and we really appreciate hearing about everything going on with Greenline. And with that, I'll hand it back to Professor Goldberg to close us out today.
Great. Nathan, well done moderating. Really appreciate your driving the discussion and great questions. Randy, great to see you. Thank you for doing this. It's wonderful. I appreciated the array of student questions about, and your experience, your broad experience, and your willingness to engage on a whole variety of questions was really great. So thank you for doing this today. It's awesome to see you.
Yeah, thanks for having me. And as I've said to Nathan, I definitely, am open to having conversations and follow-ups and things like that. So to the extent that there's anybody who's interested in doing that, I don't know if it's going through you or however it is, I'm happy to follow up with anybody who had any unanswered questions or, might want to talk further.
Awesome. Great. I did put a link for those that are watching on Zoom to future events. And if you're on LinkedIn Live, just check out our website at case.edu/entrepreneurship. We'll be together next week, tapping into my network. Next week's my college roommate who exited a healthcare company and is going to share his experiences on the journey of starting and selling and IPOing a company with some of our folks in healthcare. So tapping into my old network of business school and college friends. So Randy and Nathan, thank you again for taking the time, and thanks everybody for joining, and we'll see you all soon.